The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 29th. Can you believe it? May 29th already. Wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools, tools that just simply empower human potential, because living up to our potential is something that we must master each and every day. So let's begin with an empowering belief or two or three out here. The first one comes from Florida Scott Maxwell. Goes like this: you may need only claim the events of your life to make yourself yours. When you truly possess all you have been and done, which may take some time, you are fierce with reality out there. How about the second one from John Stevenson? And he says this: many people have the ambition to succeed. They may even have special aptitude for their job, and yet they do not move ahead. Why, he asks that question. Perhaps they think that since they can master the job, there is no need to master themselves out there. Think about that one. That is a beauty. And let's finish off our last thought of the morning here. Well, I won't say the last thought, but one of our empowering beliefs by Dr. Norman Vincent Peale. He says, a person with 100 interests, is twice as alive as one with only 50. Hey, question, folks, how many interests do you have? He goes on to say that a person with 100 interests, that's 4 times as alive as the man or woman who only has 25. Widen your interests. Broaden yourself. There's a rich world around us in books, in paintings, in music, in sports, and most importantly, people. How about that? 877-927-6648. Right now, we got the Dow trading off 76 points out at 15,333. S&P down almost a little over 8 points at 1651. NASDAQ off 14, down 0.4% at 3474. The NDX 100 off about 0.7%, trading out at 990. That's off about $7 here. The New York Stock Exchange off 59 points, down 0.6%. We've got 1,576 net declining issues at the moment. We didn't really take a look at the currency market. We got King Dollar right now back during the first hour, back 51 ticks. We'll go take a look at the euro, at the Japanese yen. We'll do that during the trading hour here. Our call number is 877-927-6648. Give us a call. We can go take a look at your stock chart as well. Let's start off by seeing if we can find any bulls and bears or where they're hanging out inside we'll start off by taking a look at the S&P 500. 1650.88 is where it is traveling. Now, that 1650 range, that is the bottom portion of the primary trading range that it is trading into. Again, a close below 1650, and one with conviction. I'm not talking 1649 or 1648. I'm talking with some conviction out there. That says that the S&P would then want to move all the way back into that 1550 level, and I suspect that is where it wants to move to. It actually, if we take a look where I believe the S&P wants to move to during this 6-month unfavorable seasonal cycle, it wants to actually pull back into about 15. Let's see, where's the 50? That's a 90. Yeah, well, I got the wrong moving averages out here. No, I don't. 200. 1470 is the price projection that sometime between now and October we will see the S&P 500 move down to. But the first move here that needs to take place is a close below 1650 out there. Otherwise, it's just hanging around in the 1650 range, and that sets up, if you can continue to test that area and close above it, believe it or not, folks, it sets up a move to about 1750. We do have a number of signs. I covered them during the first hour. If you didn't get a chance to listen to that show, go back and check out the replay. It's on Tiger TV. I'm not going to go over all of those things. I do see a change in trend in place. I went ahead and laid all of those elements out for us to take a look at. If I take a look at during this hour here any of the bullish side, because that's what I like to do, is take a look at the bearish camp and the bullish camp. I think it's important to always step back and do that. From the bullish side, I would say the S&P 500 holding the 1650 level, continuing to test it and close above it. Well, not only does it set up a run for the high of May 22nd at 1687, 1700, which would be the midpoint of the primary trading range. That would certainly be an area to be tagged, as well as the 1750 range. But one thing at a time, and right now what I do see is a change in trend in the marketplace. Let's go take a look at and as far as where the bulls or bears are hanging out, well, the bears are this bearish engulfing candle on May 22nd. That sets up your resistance area at 1687.18 out there. As far as bulls, you did have a little bit of a gap up yesterday. That gap here has held. That gap was dealing with the high of Friday, and that high is 1649.78. If you close below 1649.78, that no longer becomes a valid window, if you will. It still was a gap, but it no longer acts as an area of potential support. We do have this swing point that took place the prior trading session on May 23rd, so your level 1 support inside the S&P is going to be 1635.53. After that, it comes all the way back down into the hammer candle and into the swing point. The hammer candle I'm referring to is April the 5th. That low is 1539.50. And then you've got the bullish engulfing. You've got the swing point support from April the 18th at 1536. The following candle was your bullish engulfing. So once the area here gets broken, and that area again being May 23rd, that's 1635.53, then the S&P has got full range to move all the way back down into that swing point area of April the 18th. That's on your S&P 500. Let's go over and take a look. We did this here yesterday. Let's go take a look at the actual SPY itself, see what we've got going on inside the SPY here right now. Yes, gapping down. And excuse me. If we take a look at volume here, I've been trading for about 43 minutes. Volume so far coming out of the air, coming out of the tires here, 31 million shares in less than an hour's time. Now, yesterday on the way up was 143 million shares. So let's say 31. Let's say it does 40. 40 times 6 would be 240. We got 6.5 hours in a trading session. So we're seeing here, at least in the early stages, what looks to be like volume to the downside. Something to think about. Now, if we take a look at bullish, bearish candles inside the SPY out here, we certainly have that key reversal, bearish engulfing trading session here from May the 22nd. That sets up resistance here at that level of 169.07. You had a gap up yesterday, a gap down this morning. So, I'm not going to treat these gaps as anything of significance out here. What you're really looking for is a close below. Now, the swing point that it's trading within is May 22nd. So, bearish would be a close below 165.17. Has not tested that area yet. It's trading right now 165.48. So a close today below 165.17. That would be bearish. That would be some additional follow through to that bearish engulfing candle on May 22nd out here. Yes, a first level of testing. It could be the rising price channel, but really you've got this gap up from May 3rd out there. That's the 161.04 level. That's where I would suspect you would see the first test inside the SPY's volume there, though 144 million shares. So you're going to want to watch the volume as the SPYs move down into that area being 161.88 at the highs and 161.04. You close below 161.04, and not only will you come down to the top of May 2nd, which is 159.89, I suspect you'll come all the way back down into the swing point area from April the 18th. Now, 157.52, that is your swing point from October of 2011. So once should the SPYs get below 157.52, that would also be referred to as getting back inside the range. That would be considered potentially a false break topside. So 157.52, that had 233 million shares. It'll be important. Now, we know getting above that level, that's this red line going across my screen here. We didn't see anywhere near 233 million shares as it moved higher. In fact, the only time we got up to that level, which was 243 million shares, happened to be the reversal session from May 22nd out there, that key reversal session out there. That is on your SPYs. Let's go take a look here at the small caps at the Russell 2000. The IWM, we'll start off with that. Then we'll go take a look at the actual Russell 2000 index out here. The IWM right now trading out at 98.47. As we look at this here, this is still trading inside the candle session from May 22nd out there. Bearish engulfing. That was after completing a 1 to 1.618. A to B equals CD. Bearish. The bearish stance on this, on the Russell 2000, is going to be a close below 97.11. That's going to be the low here of May 22nd right now, just trading inside that. So that's where the bears are hanging out, and the resistance is going to be your May 22nd high, 100.38. If we take a look at bulls here, it would have to be this gap up from May 3rd, just like we saw inside the SPYs. So we'd say support level 1, 94.35. Support level 2 would be the top of the prior session. That would be 93.47. Volume on those two sessions, 38 million and then 51 million. So it's the 51 million that you're going to want to use as a benchmark. If we take a look so far at this morning's volume, in 47 minutes of trading, 8.3 million shares to the downside. That says you've got maybe about a 50, 60 million session day if volume were to maintain this level, which it likely isn't. Yesterday was 46 million to the upside, going against 68 million from May 22nd out there. As long as the IWM trades within inside that May 22nd swing point candle, that says that the highs can be tested at 100.38. That would be the bullish case out here. So last hour, I spent my time really on the bearish case. And now I spend my time really taking a look at it. I'll give you the bearish case as well, but really what is the bullish case on any of these indexes or ETFs that we are taking a look at. If we go back and take a look at the Russell 2000, I'll give you the numbers on those as well. A second day in a row where my charts are not responding the way that I would like them to. It just is what it is. So if we take a look at the Russell 2000, right now it's trading at 990.22. We can see that 1 to 1.618, A to B equals CD. That was coming off of the bottom of the rising price channel. That was the low from April 18th. That was 898.40. That's your A point. Your B point on this, we did have a confirmed A to B equals CD up. That was your April 30th high. That was 947.46. A very small retracement, although big with volume, shallow in retracement Fibonacci terms, was the low of 924.21 on May Day, on May 1st out there. Goes ahead, completes the 1 to 1.618, A to B equals CD up. Russell 2000 gives you that bearish engulfing, gives you that key reversal session on May 22nd that says 1,008.23 is going to be your resistance level. If we take a look at where the bulls are hanging out, well, the bulls are hanging out in this gap right here from May 3rd. May 3rd low is 946.94. The high of the prior trading session would be 940.72. That is if the Russell 2000 closes below. Well, first here, truly would need to break the swing point, which is May 23rd now, that level of 970.63. You break that level, and that says that the May 3rd area is where the Russell 2000 would head to. 877-927-6648. We've got the Dow down 77, S&P, James Bond. It was off 777 out there. We'll be right back.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow off 109 points right now. S&P down 11. Leading things to the downside here, you've got Google, Priceline. Google's off $10 and change. Priceline down $10 and change. Tesla Motors off about $6.70 right now. Simon Property Group off $4 and change. Let's check in on the currency market first. Then we'll go start taking a look at some of these stocks here popping and dropping. So the euro-US dollar currency pair is the chart that we're looking at on my screen at the moment. And, a couple different things that we can take. This is a daily chart that we're looking at. So if we take a look right now at the prices traveling at 1.2952. Now, if we come from the swing point high, which was May Day out there, May 1st, 1.3241, that's the high, and we come all the way down to the low that was established here on May 17th. That's really the set of swing points that we're looking at. That low, by the way, 1.2795. If we go from the high to the low, well, you'll see a green line going across my screen. That's at the 0.382. Well, you see a number of them. What I do is on my retracement ruler, I'm looking at 0.382, 0.618, 0.786. Now, obviously, I'm marking 0 and 1, meaning the starting and the ending points out here. So the retracement level of 1.2965 is your dead cat bounce, is your 0.382. That is all that the euro has been able to get up to. It has tested that, did it on May 22nd, our key reversal session inside the U.S. markets. It did it also on May 24th. It has done it so far this morning as it got up to a high of 1.2976. Now, on the daily chart, you can see neither overbought nor oversold, so it has room to run whichever direction. If we just take a look at trends coming off of a couple of candles out here, we can see that it's really just traveling inside this little cone coming off of the swing point high, but I'll just use the high of the trading session from May 14th out there, and then using as my next touch point the high of May 22nd. So you can see the wedge that it is traveling within. Now, the other things here that we can pay attention to are other areas of support, those being the swing points, not really because of any bullish candle that I'm referring to, and I'm looking back now at March 27, 2013, where the euro moved down into a low of 1.2749 out there. The very next candle out there, even though it's green, that doesn't mean that it's a bullish candle, and it wasn't. It's not it was no type of reversal. I should say this. There's no type of reversal session out there inside the marketplace. You did have a little bull sash candle right here that took place on April the 3rd out there, but no real bulls defending. Just a swing point, just normal areas where price would move down to. And that's not to say that we didn't have some bulls hanging out down here at the red horizontal line coming across my screen. So I would say the real level of support on the euro-US dollar is going to be that November 13th low out there, and that is 1.2659. Now, what I want you to pay attention to here is really what the euro's been doing ever since the September of 2012 timeframe. It's created this little consolidation range, the red and the black horizontal lines going across my screen out here. So what we can say here is, let me go ahead and I'll take this this little tool, and I'm going to go ahead and draw, I'll call it the more conservative consolidation. I'll just simply come down to the lows here that we were taking a look at on March 27th. So whichever way the euro breaks this consolidation, where it should travel to is at least equal to the consolidation that it was traveling within, either to the upside or the downside. You'll see if I go ahead and I move this box to the upside, what it will do is it'll move, the euro would move all the way back up to its highs out here back from February the 1st. That would require the euro to truly move higher for the U.S. dollar, while we'd see that get weaker and pull back. Likewise, if I come down to the bottom section here, and now if I go ahead and I take my retracement, I haven't done this, I'm just doing this live here. If we go ahead and take our retracement ruler, going back to July 24, 2012, where the euro had moved into an oversold condition, just looking at that relative strength, relative weakness indicator. So if we go from that low, 1.2041, all the way up to that the February 1st high at 1.37098, you'll see that price would move below the 0.786 area, which is 1.23982. That says to me, forget about just doing this consolidation. This would actually, if the euro breaks that November 13th low, 1.2659. What this says to me is the euro will go ahead and travel all the way back down to the lows of July 24th, 2012. But first, it's got to break one way. This thing can travel sideways in a consolidation range for a good period of time to come. But what you want to be paying attention to is what happens if it does break the consolidation range out there. That is on the euro. If we take a look at a shorter-term time frame and we look at the 30-minute chart, we'll take a look. We'll see that same dead cat bounce that all the euro's been able to get out of, coming off of the highs out here at 11:30 in the morning on May 8th, all the way down to the lows at 10 o'clock in the morning on May 17th. You'll see it gets just slightly above that 0.382, but look at where the euro is at right now. It is in the extreme, what we'll call extreme overbought territory. So the euro really should begin to pull back here sometime over the course of the next 5, 6, 7, 8, 9, 10 hours. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 127 points right now. S&P off 14. And let's go back over now. Let's go to the U.S. dollar, Japanese yen currency pair, because maybe there's a trade that is setting up here that you would be interested in taking a look at. Or there's certainly going to be a release of information coming to us on the U.S. dollar, Japanese yen currency pair. Now, I'm looking at the 30-minute charts. And let me tell you, folks, it has created 3 really nice patterns here on the 30-minute chart. 3 very nice tradable patterns. Number 1 was a 3 drive to a top pattern. That's the blue shaded. It's the first blue shaded area if you're watching us on Tiger TV over on the left-hand side. Had really ideal. I mean, this was an ideal 3 drive to a top pattern. The reason being is that nothing was forced here. If we take a look at the cycle time frame, we go from the first drive to the second drive. You'll see that that third drive was made just a tad early, but just a tad early. Had wonderful 1.618 expansions in between the swing points out there. It's really everything that you like to see. And then, of course, what we saw, and then it gave you the actual signal, which was the bearish engulfing candle. That took place at 4:30 in the afternoon on May the 17th in the marketplace. Then it goes ahead and moves down. Then we get a nice 1.272, a little bit over a 1.272 butterfly expansion. That is the yellow pattern that is out here, and that may have really been the top that for a time period that we'll see inside the Japanese yen. The reason being is that it has stopped making expansion patterns to the upside here. If I come back and I pull this chart back here, what you'll see is nothing but expansions really to the upside for the most part inside the Japanese yen. U.S. dollar, Japanese yen, 30-minute chart. Now, let's come over here and let's take a look at where we're at right now. First, we did have that Gartley sell pattern, 0.618 Gartley sell pattern, and that led all the way to making a move of a move, 100% move of a move, coming all the way back down here into 2:30 in the afternoon on May the 24th out there. And as we take a look at this, now that was not a hammer candle, this candle session here at 2:30, but we did have a bullish engulfing candle on the following session coming into the 3 o'clock time frame. So that says that, your support level 1 here is going to be the low of 100.653. That's going to be the low at 2:30. And you can see the bulls here as price was moving down into these areas here. What we can also see is that we can see bulls hanging out. Here's a little piercing candle. That's at 21:30, so that would be 9:30 in the afternoon. Here's a bullish engulfing session from 6:30 in the morning on May 27th. Here's another bullish engulfing bullish engulfing type candle at 17:30. So what is that? 5:30 in the evening on May 27th. And then this morning here on the 30-minute chart, that's what we're looking at. We've had two hammers. We had the first one form right here. We did see the Japanese yen move down into the extreme oversold territory. That was at 7 a.m. You can see the RSI reading at 26, so it's below 30. And then we get our first bullish sign on this move down out of the oversold territory. You get a nice hammer candle here at 7:30. Then we get a second hammer candle that forms at 8:30, almost testing the low of that first hammer, which, by the way, is 100.953. What did we get down to at 8:30 during that session? 8 to 8:30 gets down to 100.969. So we know where the bulls are hanging out right now inside the U.S. dollar, Japanese yen. Now, if you get a close below this area, which is 100.95, that's below the hammer. If you're long, you're wrong, right? Very simple. And as well, you can take a look at how we are in the oversold territory. One of the things why the U.S. dollar index is pulling back here this morning is we are seeing the yen here, U.S. dollar, Japanese yen, weaken. So, I'm sorry, getting stronger here. So it's getting stronger, my apologies. Getting stronger. The U.S. dollar index is getting weaker. But we know where the bulls here are hanging out inside this currency pair. If you're long, you're wrong only means in this case here, you would travel down to the last area where the bulls were defending themselves, and that's at that 100.653 level. That's going all the way back to the 2:30 session on May 24th. But in this case here, the bulls' backs are up against the wall. I would expect to see a move out of here, nothing more than just a normal retracement. That normal retracement level would take us, I would just simply take a look at coming off of the swing point from 1:30 in the morning. This is this morning here. That level was at 102.47. You would expect the yen to bounce to at least the 0.382 level, 101.53, maybe 101.89. Now, if we take a look at A to B equals CD down patterns out here, not really a lot that you can grasp your fingers on. If we came from that same swing point that we're using, that high to the low that was put in at 5 a.m. this morning, and then a small bounce out here, you'd see a 1-to-1 A to B equals CD that is close to being completed, but with such a shallow retracement out there, to me, that's not a very good A to B equals CD pattern to take a look at. What we can also see taking place here at about this price level where the Japanese yen is trading is take a look at that wide-ranging bar that came in at 20.30. So that was coming in at, 8:30 in the evening on May 27th out there. So you can see here just that wide-ranging bar also suggests to you that this is an area here where the bulls, I'll just put a black line across my screen, where the bulls are out here truly trying to defend their position. So nothing like being able to buy a hammer low because when you see a close below that, you just simply go ahead and exit your trade. In this case here, you know that your next area of support would be right down here in the time in the price area of 100.65. So that is on the U.S. dollar, Japanese yen currency pair. Now let's go take a look at some of these stocks here that are popping and dropping. But first, let me walk over to bonds here. Let's take a look at bonds here. Are trying to, hold the consolidation lows that are being tested once again. That's the February 4th area. That low right around 1.40. 0.23 out there. No bullish, not a bullish candle that we're taking a look at. Yes, it's green, and yes, it's held that area. Yes, it's coming from an area where we should see a bounce. It is in oversold territory, so we should see bonds here get a bounce, but that is not a bullish candle. Yes, it's green, but that's all that it is. So now let's go take a look at some of these stocks here that are popping and dropping. Michael Kors was out with numbers here before the bell. So let's go see what actually let's see what they actually generated or reported here. Stock is moving a little bit higher, so the results, the market is digging it. Michael Kors generated, let's see, revenues here. Net sales, 500. How about this? 577 million versus 362 from the year earlier. So doing a nice job there. I don't know what their same store sales are. Let me see. Their net income that they generated is not popping off of the chart here for me. But let's take a look at the stock chart. This thing here, most recently, so it had a breakout session, which took place on February 12th, 2013. 20 million shares to the upside, but that level came back. It was tested. So that no longer is an area of support because we did get a close underneath that, and it was with some volume underneath that, meaning the gap up from February 11th's high, which was 57.76 out there. So you got a close below that. That window has closed, no longer acting as a support area. What did hold as support inside Michael Kors was this 200-day exponential moving average. The first test of it, KORS, by the way, is the ticker symbol, happened to be April 17th. So April 17th, it moves down. It tests that 200-day exponential moving average. You get one more test of it that day. That trading session was 4.5 million shares, and it comes back and it tests that with lighter volume, 3.6 million shares, 3.5 million shares on April the 22nd. Michael Kors here, the last time that it tested the 200-day exponential moving average was on June 8th, 2012. So you can say that that level has held as a pretty good support zone. Michael Kors also did have a real breakout session that is also held, as support. That takes you to the August 15th level. If we just simply draw a line across the bottom of that gap up session, again, that would be the session from April 14th with 18 million shares. You can see price came back and tested that level a couple times. That held as support. So Michael Kors looking pretty good here. So maybe what you want to do is maybe on your, if you were interested in getting into Michael Kors, maybe you should take a look at buying this equity the next time it comes down and tags that 200-day exponential moving average. If we take a look at what it's doing here right now, trading inside the swing point from February 19th. That has 7.7, just we'll call it 7 million shares. Today in trading so far, 7 million shares. So it's taking on that swing point. Looks like Michael Kors here wants to bust above that level. That would be $65.10. It has not tested that area just yet. So far intraday, it's been up to $64.29, but it's pushing into that swing point with the volume out here. So Michael Kors looks like it wants to go ahead and try to bust out. Not too bad when you consider that the general market here is down. Right now you got the Dow up 147 points out there. Let's take a look at a weekly chart on this. Let's see if there's a weekly A to B equals CD up on this. And there is. Let's see, was the swing point taken out with volume? Looks like taken out with conviction. That swing point on this was the March 9th, 2012. About 13 million shares, 12.5. The high was 50.69. Look at that wide-ranging bar and accelerated volume. 43 million shares was 42.6 on August 17th. That confirmed your 1-to-1 A to B equals CD. But if we take a look at the retracement, your A to your B, it was pretty close to a 0.618 retracement, which was 33.89. Actually got down to 35.50 out here. If we take a look at this on the weekly chart, the February 22nd, 65.10 high, 48 million shares. So you'd have to take a look at this week to see a breakout with volume, and you'll have to just simply take this week's volume, divide by 4, multiply times 5, and that'll tell you whether you've got a weekly breakout inside Michael Kors. But the stock is looking pretty darn good out here. Let's go and take a look at some of the volume here. I'm going to switch over first now over to the 30-minute charts of the futures contracts, because let me show you something that is key here in my opinion, and that's going to be the Dow. Now, inside the Dow, we know that we've had volume off of the top on a number of different equities out here. IBM, Procter & Gamble, although Procter & Gamble did have a nice move higher with some accelerated volume as well. What I'm looking at, breaking a trend line is very important. It also indicates that you're breaking a trend. And during that first hour, I think I covered very thoroughly my thoughts on why I believe the market is turning here. And so go back and listen to the archive of that. Lays out a number of different charts out here. Now, one that we didn't take a look at was the actual Dow futures. And inside the Dow futures, I'm showing a red trend line. That red trend line is coming off of the, versus a channel, this is just truly a trend line, is coming off of the lows right around the 11 o'clock time frame inside the Dow futures, that level being 14,394. Your next level, your next touch point, is going to be the 4 p.m. close on May Day, on May 1st, out at 14,626. That was the last real pullback that we had in the market. So now I'm going to go, you can see that red diagonal trend out there, a nice-looking trend, probably, 47.2 degrees. Just kidding. It looks like about a 45-degree angle out here. And what we are now seeing during this half-hour session, during this session here going into 11, we are seeing this area being broken. This is the first time that this trend line has been broken out here. So this is going to be key to be paying attention to. Now, you can see on the 30-minute chart the Dow futures in that oversold territory. So at some point in time here, the bulls are going to come in. They're going to rush in. They're going to try to support this level. Where is the last time that we saw bulls out here? Well, if you go to the left-hand side of the chart, it's where you'll see that hammer candle, just like we saw on the S&P 500. That's at 10:30 in the morning on May 24th out there. That says 15,181. That's your level of support. That's the low of that hammer candle. But we are seeing a break of this trend out here. And if we see the Dow go back, try to tag it, get back inside, reject it, and close below that, then the Dow on the 30-minute chart is giving us a change in trend signal. That was one that we didn't cover during the 9 o'clock hour out there. Now let's go take a look at the ETF indices out here. Let's go take a look at the 10-minute charts, see what kind of volume we've got coming out of these equities, these ETFs, if any. Let's start off by taking a look at the diamonds. Now, in that first hour, we had a call from Michael in Miami. He wanted us to take a look at DuPont. And so with the Dow trading down 150 points, we'll go over and take a look at DuPont, see how that is actually trading here today. But first, we're going to take a look at the Dow diamonds. Now, on the diamonds here this morning, moving down, gapping down with about 358,000 shares. That was at the open. Coming into 10:30, 257,000 shares, so no big volume so far. Substantially at 10:40, this is a 10-minute chart, 195,000 shares, and in this session right here, 214. So we're not exactly seeing huge volume come out. If we take a look at the swing point that the diamonds will likely trade into, it's going to be this cluster of swing points getting you back into the May 23rd area, right around the 10:10 time frame, and that has about 528,000 shares down there, as well as 812. So looks, and you can see here on the 10-minute chart, also moving into that extreme oversold territory. So I would expect the diamonds to find their footing, to find their support. Here you can see a little hammer candle at 10:10 on May 24th out there, right around the 151-ish level. It's trading at 152.35 right now. That's on the 10-minute chart. If we go over and take a look at the diamonds on the daily chart, let's go assess what the daily volume looks like. So far today, it's done volume of 2 million shares in just over an hour of trading. So we can say if this volume, we didn't see anything great volume-wise, just steady volume, just steady Eddie selling, if you will. So if steady selling were to continue inside the diamonds, it's done 2 million shares in an hour. That would set up about 12 million shares or so to the downside. May 22nd, we saw 13 million shares push higher. had a key reversal session out there. Hey, the next trend line here is this rising price channel that the diamonds would try to move out of. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and don't forget, we've got that Tiger Dollar promotion that is running through the end of the month, so we only have a couple more days left. Make 20% on your money. Rush over there now. It's on the homepage of TFNN.com, and what a great way to be able to invest in yourself, make an additional 20% on your money, and then additionally, for anything $500 up to $1,000, there's going to be an additional 5% donation made in your name to the one fund, fully tax-deductible, and anything over $1,000 is 10% in your name as well. Right now, the Dow's off 149. Leaders in the clubhouse inside are dragging the Dow down here. You got Verizon is the leader. You got Johnson & Johnson, McDonald's, Procter & Gamble, Coca-Cola leading the way down. Inside the NASDAQ 100 here, percentage-wise, we've got Equinix, Facebook, Yahoo, Regeneron Pharmaceuticals, Activision, Mondelez, and Maxim integration out here. Inside the S&P 500, it's Cliffs Natural Resources, Plum Creek, Ventus, and CenturyLink. That's all to the downside. And inside the New York Stock Exchange, it's MRC Global. MRC is the ticker symbol, and Orbitz Worldwide. They are the two leaders percentage-wise to the downside. To the upside here, inside the Dow, it is Hewlett-Packard and Bank of America. Hewlett-Packard is up 40 cents. Bank of America up 13 pennies out here. Leading the charge inside the New York Stock Exchange. Let's see here if I can click on that quickly. I don't know why that's not working. Inside the, well, it's because of me. That's why it wasn't working. To the upside, inside the NASDAQ 100, this should tell you something. Sears Holdings having a dead cat bounce. Rand Gold Resources is number 2. Now, inside the NDX 100, looks like maybe there's about 10 equities that are actually positive here this morning. Western Digital, another one, Apple, Analog Devices, Cisco, in Intel. In the S&P 500, leading the charge to the upside is SLM Corp. That is up nicely this morning here. SLM is the ticker symbol. Chesapeake Energy, Juniper Networks, Ford, Tyson Foods, and Hewlett-Packard really leading the charge inside the S&P 500. I want to go back here, take a look at DuPont. DD is a ticker symbol for Michael, who had called. He was looking at trying to maybe short DuPont. I suggested that really he look at just the DXD, which is the ETF for the Dow versus DuPont. DuPont holding up pretty well here so far this morning. 1.2 million shares to the downside. And I don't know, these are not wide-ranging bars out here. I just know that there's plenty of volume on the trading sessions of May 9th as well as May 10th. And until those lows are really taken out here, and then even when those lows get taken out, DuPont's got some pretty decent support up at April 23rd high at about 52.54. So there's other equities with inside the Dow that would be better off shorting. If we go take a look, I don't know if I've got them on this screen or not. Let me see here. Do I? Nah, I have to switch over someplace else. Let's go take a look at Procter & Gamble, though. PG had some volume off of the top out there. Oh, how about this? It's creating an island. So take a look at this equity. Oh, my goodness. Let me just refresh my chart here. Let's do this. Procter & Gamble's got some big problems. This must mean the XLP, which I didn't get a chance to take a look at, has got some big problems this morning. Procter & Gamble, after having volume off of the highs, big volume, 25 million shares out there, folks, and it did move up on the change of a CEO with 25 million shares on May 24th. Today, it's created an island reversal formation, back up at those same highs. Procter & Gamble has got big problems in River City. We're going to see PG. This would be a better one to short if you were so inclined to do so. I think the entire sector would be better. Looks like Procter & Gamble is going to make its way down to about 73.25, maybe 71.75. Stay tuned for Basil Chapman, folks, and always remember, the way you do anything, absolutely, I mean absolutely, is the way you do everything. Become a pioneer of your future versus a prisoner of your past. Have a great day, folks. I look forward to seeing you in the morning. Take care.